How many times have you thought, maybe my trading strategy doesn't work? And then what do? You tweak the entry, you change indicators, you start using a completely new trading tool that you've never used before. Maybe you suddenly start trading on a different time frame because you've heard a different time frame works better. Or maybe you change markets altogether. But the results don't change, do they? And the problem here is not that the entry that you have been using isn't working and that you just need to find a better entry system. The reason why you are not profitable is because you have an incomplete trading strategy. You have never looked beyond the entry and you believe that trading is all about the entry. But as long as you have an incomplete trading strategy, no matter how much you try to improve the entry and no matter how good your entry system is, you will not become profitable. I have seen this hundreds and hundreds of times. And as soon as traders shift from this entry-oriented focus to this broad focus and understanding that a trading strategy is more than just an entry, real change can happen. So in this video and in this podcast, I will walk you through what it takes to improve your trading strategy and how you actually can create step-by-step a complete trading strategy that is going to be way more robust and deliver much better results. So before we get into the checklist that I have prepared for you about trading rules and how we actually do create trading rules for all parts of our trading strategy, I want to talk about maybe the most important concept when it comes to improving as a trader, and also one of the main reasons why most traders don't see any progress and will probably never become profitable. And when we talk to traders through our work with Edgewonk and Tradeciety, it's so clear what separates the profitable from the struggling, from the losing one. And at the same time, it's so fascinating because the path from losing and struggling to consistently profitable is also very clear. And that is really good news because it shows you that there is a clear path and that there are very clear answers. And the problem that a lot of the struggling and a lot of the losing traders have is that when you believe that profitable trading is all about the entry, and when you believe that you just have to find the right entry method in order to become a profitable trader and make money, what happens is that if you don't make money and if you have losses, you believe that the entry is the problem here. And this is so important that I can't stress this enough. If you cannot understand this concept, you have zero chance of ever becoming profitable. But if you understand this, you actually can become a profitable trader. Again, if you believe that trading is all about the entry, and if you believe that you have to find the right entry method in order to trade profitably, and that if you don't make money, the natural and the logical consequence is that you believe the entry is the problem here. And what happens is then you're going to go back and try to fix the entry. You try to find a different entry method because, well, in your opinion and in your belief, that's the thing that needs to be fixed. This is keeping you in this vicious cycle of finding an entry system, trading it, losing money, finding a new entry system, trading it, losing money, and so on and so forth. And I've seen traders stuck in this cycle for years and years and years. And if you don't break out of this cycle, well, you will give up trading and you will never become profitable. So it's really important to make that switch, to understand that profitable trading requires as I call it, a complete trading strategy. A complete trading strategy has rules for the entry, of course, but also for your exits, for your stop loss, take profit, trade management, risk management, process rules. And this is what then builds a complete trading strategy, because every part of your trading strategy is covered. You have optimized, you've thought about, and you have planned for every eventuality from before you get into a trade to when you're in a trade to what happens after your trade is over. And that is then how you can trade with confidence, because that there are no uncertainties in your trading. A lot of traders who only obsess about the entry, once they're in a trade, they feel completely lost. Of course, this is natural because you have never thought about what comes after the entry. And you think that, well, just a good entry will take care of itself. But this is not how trading works. And once you can move past that entry-obsessed and entry-focused mindset, you will become a better trader. So before we get into creating the checklist, I have 3 to 4 points what actually make a good trading rule. And a good trading rule is specific. It's not vague. So a lot of traders have rules like, when it's bullish, I get into a trade. When it's bearish, I get out of the trade. This is not specific enough. It's super vague, and it leaves a lot of room for interpretation, for subjectivity. And then also traders will start bending the rules, and that is not a place where you want to be. Because as you will see in a moment, a good trading rule is also actionable. A good trading rule will tell you exactly what to do and when to do it, but at the same time, it will also tell you, and it will also have parameters which tell you when not to do anything. So it gets you into a trade, it keeps you out of the market. It helps you to exit the trade, but it also tells you when not to exit your trade. The third point about a good trading rule is that it's repeatable. It helps you to make the same decision every time. The best traders that we have seen are traders where every trade looks identical to the one before. You don't have a lot of deviation. You don't have a lot of inconsistencies. When we look at an Edgewonk journal of a profitable trader, we see that every trade looks exactly like the one before. And that is all because traders have repeatable rules. They have rules for every situation. There's no uncertainty. There's no room for subjectivity. Everything is very well mapped out and very clearly defined. And finally, a good trading rule is also balanced. It's not so rigid that it breaks under different market conditions. A lot of traders have problems, especially when they create and optimize their trading rules during multiple backtests, is that at the beginning they have rules that they work some of the time, other times they don't work as well. And then traders try to fix those trades that don't work. And then they look at those specific situations when a signal didn't work in the past, and then they try to fix that specific situation. And then what happens is that your rules are tailored to a very specific period in the past. But obviously, moving forward, the markets will look completely different, and they will not behave like that specific time period that you then optimized your trading rules for. So you have to meet this balance between being not too rigid and being open enough so that you can trade across different market conditions. So let's talk about the 4 building blocks of a trading strategy. And we're going to start with entries, but then we're going to move beyond the entry. Of course, we need to talk about entries. Entries cannot be neglected, but they're also not as important as many traders make them out to be. It's very important, as I said, a good entry rule is or a rule set is a set of rules that gets you into a trade with confidence. You know exactly when to pull the trigger, but you also know when not to trade. And that is so important. A lot of traders will miss that. And it's really clear, it's very important that your entry rules are clear. It's not something vague as I enter when the market looks bullish. You have to be very, very clear about your higher time frame and the lower time frame. Don't just say, yeah, I use a multi-time frame approach. Be very clear about what is your higher time frame, what is your lower time frame, and also understand what do you look for on the higher time frame. What do you look for on the lower time frame? What are the tools that you're using on the higher time frame versus on the lower time frame? What are the candlestick signals that you're looking for maybe? What are the indicators that you're using? Why and how are you using certain tools, indicators, price action signals? What do they tell you about the market that you're looking at? And also be clear about your trading times. Do you trade around the clock, or do you have a fixed trading period where you are trading the markets? In Edgewonk, if you've seen our videos on Edgewonk, it's super clear. When we look at the better traders, we always see that they have maybe 3 to 4, 5 hours at the maximum trading hours per day when they trade. And then the rest of the day, they don't look at their charts. They do something else. Whereas the amateur and the struggling trader, they trade around the clock, and they will hit this fatigue point where they just have been staring at charts for too long, that their mental capital has been depleted and they make suboptimal decisions. So it's really clear that you also are very certain about your trading times, the markets that you are trading. And that's then what makes up a good rule set for your entry rules. Let's take a look at the exit rules then. And exits are, well, I wouldn't say more important than the entry, but at least equally important, because the exit actually determines the outcome of the trade, obviously, right? So an exit, a good exit, can make a weak entry strategy profitable. And a bad exit strategy can make even the best entry system a losing one. So it's really important that you know how to exit your trades. At the very broad and the very basic level, do you use fixed take profit approach? Do you use a trailing stop loss approach? Or do you use an exit approach that is completely based on chart context, and you're not using a fixed and you're not using a trailing stop loss, but you're reacting specific things on the market, on the charts? And for each, then it's very important that you understand what are the exact rules and the conditions that you're looking for. How do you place your fixed take profit? How do you use a trading stop loss? What are the tools that you're using to determine when to trail your stop loss? Very, very important that there's not a lot of room for subjectivity. And that's a very good just thing to keep in mind. Whenever you find yourself in a position or in a moment in your trade when you don't know how to respond and you don't know what to do in that moment, that's a sign that you have not created a trading rule that is clear enough, or that even covers this aspect of your trading. So whenever you feel that you don't know how to respond, and your trading rules, they don't really cover that, use that as an opportunity to improve your rule set. And that way, over time, you can keep plugging those holes in your trading approach, and you can improve and tweak your trading rules. Because, well, in the beginning, you might have rules, but the rules, they will not immediately guarantee you profits, of course. But they're going to give you a framework that you can operate within. And that's so important. And that's another very important point here, actually, that I want to stress a little bit. You might have rules in the beginning, and rules don't automatically mean that you are becoming profitable. Rules are just a framework, and rules give you consistency. And then rules allow you to analyze and optimize your approach. You can look back at your last 30 trades, and if you've been following your rules precisely, you can see exactly which rules are working, which rules are maybe not necessary, and which rules maybe need a little bit of tweaking in order for you to improve your approach and feel more confident in your trading. But if you look back and you don't have any rules and all of your trades look random, where do you even start? How do you even start understanding your trading performance? And how do you even look for ways to improve when every trade is a little bit different and the trades never follow a common red line? So after the entry and the exit, let's talk about the trade management. And in Edgewonk, we see that having trade management rules that are not clearly defined will almost in all cases lead to an underperformance. And we have seen it time and again that traders leave so much money on the table because they mismanage their trades. And mismanaging their trades, obviously, first of all, comes from not having clear rules for how do you actually interact once you're in a trade. It also comes from just looking at your P&L way too much. A lot of traders will follow their trade tick by tick. The market moves up, the market moves down, and your broker is always fluctuating, or the P&L and your broker is always fluctuating, and that can create a lot of stress. And to overcome that stress, and then also the next step to overcome the impulse to impulsively interact with your trade, you need to have very clear rules. When do you adjust your stop loss? So maybe you're using an approach where you do adjust your stops. When do you do it? And how do you do it? Have very, very clear, precise rules. When, if ever, do you scale in or out of the trades? When we look at traders who scale in and out of trades, it's often done impulsively without a plan, and that can really mess up your trading performance and your risk management parameters. So again, have clear rules for when you do it and how you do it if you do it. Also, have rules for whether or not you even need to monitor your trades. If you have a fixed stop loss approach, or maybe you have a trading stop loss approach that is kind of automated, do you even need to look at your trades all the time? Or are you just better off closing your broker platform and not looking at your trades then? Another point could be, how do you deal with having open trades during news events? How do you deal with open trades over the weekend, overnight? Is that something that you do? Have a clear rule for that. Don't just do it based on guesswork, and don't do it from one trade to another trade differently. Have very precise rules that help you do it in the same way, trade after trade after trade. And again, if you ever come across a situation where you're not sure on how to respond, make sure that you write that down and then cover it with a new rule in your trading system and your framework. Next, we talk about risk and money management. And this is the part that decides whether you stay in the game long term. You might have a good system, you might have a good entry, you might have even thought about your position size, your take profit and your trade management. But if you have not thought about risk and money management, you can easily wipe out weeks and months of progress. And we have seen that. Traders can hold it together for a week, for a month, maybe 2 or 3 months, but there will come this point where a losing trade or a losing streak will completely knock you off balance and will completely lead you to a place where you start gambling and start trading recklessly. So when it comes to risk and money management, define how much you're risking per trade. Define what is your maximum exposure. So how many trades are you comfortable with holding at any one point in time? And that's very different. I have seen traders who are comfortable holding 5 or 6 trades at the same time. And I've seen traders who can not deal with more than 1 or 2 open positions at a time. And it's really important that you understand that. And a very good way to understand that is just to see how you feel. Do you feel overwhelmed when you have 4 to 5 trades open at the same time? Then this is too much, obviously, and you should decrease your maximum exposure. Maybe you should have a rule that says I can only have 2 open trades at one time, and that is then your rule for your risk management. Also, what is very helpful is to have daily or weekly loss limits. So maybe on a day, if you have 2 losses in a row, this is the point where you start trading emotionally and where you just start doing reckless things. You try to play catch up, you try to over leverage, you try to make it back. So after you hit 2 losses in a row, you completely close your trading platform, you close your computer, and you walk away. Don't even give yourself this option where you stay in front of the charts, where you still watch the charts. Close it, walk away, come back the next day. Same for a weekly loss limit. How many trades can you lose in a week and still perform at your best? Make sure that you understand that. And in the beginning, it can be really as simple as 3 losses in a row or 3 losses in a week. This is typically where I hit my threshold. This is where I then cannot focus anymore. And when I try to do reckless things, walk away, come back the next week, and you will see the world hasn't ended. Your trading account is still there. There are new opportunities coming, but you have not created any more damage for you that will take days or weeks to get out of. And then within the same area, you can have drawdown rules. So what do you do after you are recognized that you're in a losing streak? Those can also be called sometimes process rules. So let's say whenever you hit a losing streak, you have a specific rule on how to deal with that. Do you review your last 10, 20 trades? Do you look for a way to change your strategy? But make sure that you have a rule in place. You can also have rules, obviously, for when do you journal your trades. Make sure that this is very clear, and you not let it up to chance when you come around for journaling your trades. It can be as simple as, at the end of the day, I just quickly import my trades into EdgeWonk, and then on the weekend I come back and tag the trades. I do my inputs, I add screenshots, and kind of have a rule set in place for that. Or you don't have time during the week, then make sure that every Saturday or every Sunday you have a time slot dedicated to journaling. This will make sure that over time you are way more likely to actually maintain your journal and to do the work. Also then, when do you review your trades? Do you do a monthly review? Do you do a quarterly review? What do you look for in your reviews? What are the things that you do to keep improving and keep pushing yourself? For example, one thing that I really like to do is just make sure that I identify one thing that I'm not satisfied with in my trading from the last week, and that I will try to fix that next week. And it sounds simple, but identifying one thing week after week and trying to improve on that next week can make a huge, huge difference over time. Again, I really want to stress that having rules alone doesn't guarantee that you suddenly start making money, but it's the first and most important building block. Another very important point here is that what we have seen is that even though traders have rules in place, it doesn't mean that you're automatically going to follow your rules. Having rules and following your rules, unfortunately, are two very, very different things. And the good thing in Edgebonk is that you can clearly right away see how often have you broken your rules and how much money did it cost you when you're breaking your rules. So creating rules is the first step. Following your rules is the next step. But you need to have rules in order for you to start getting to a place where you can analyze your trades and where you have a better understanding of what kind of trader am I? Am I a trader that is kind of disciplined, or is discipline even another issue in my trading that I need to work on? And you can see this is a multi-layer problem. Traders who only think that trading is about the entry, that's the layer one that you have to overcome. Layer two is you need to have rules for every aspect of your trading. Layer three is then making sure that you are able to follow your rules over time. And then layer four is that you then keep optimizing and keep tweaking your rules and your whole process. And that is exactly the structure that we have developed in Edgebonk as well. You create rules for the different aspects. You see how often you break them and how much it's costing you, so that you bring awareness to that aspect as well. And then the final point is that you keep tweaking your rules. So this is the natural process that you will follow typically on this path to getting away from the entry-oriented mindset to then hopefully getting to a place where you have a profitable, long-term and professional approach to trading.